Hi, everyone. Given the significant volatility that we're seeing in markets, wanted to hop on here and discuss the geopolitical situation in Iran, as well as how we're positioning portfolios. So first, I think when you look at a geopolitical event, you have to look at history and to see what tends to happen to markets and how long it takes to play out. So I have a chart here that shows 56 geopolitical events since 1956. And what you can see is there's a lot of volatility before the geopolitical event, as well as up to 2 months after the event. Keep in mind, this is an average, so it could be higher, could be lower, but this tends to be the investment playbook around geopolitical events. And then once, typically, a couple months after the event, markets tend to respond very favorably because some of the unknowns become more known and there's more certainty and clarity. This is a pretty predictable playbook. And I do think this is a good template for what's happening now. But there are a couple differences. First, there's a regime extinction risk in Iran. And when somebody gets backed into a corner, they tend to act like a wounded animal and become very, very unpredictable. And this increases the risk to energy infrastructure, which could negatively impact the global economy. Second, the Strait of Hormuz is an area that we're watching closely. This is a passageway from the Persian Gulf into the open ocean, where 20% of oil flows through on a daily basis. It's about 21 miles wide, so it's pretty tight. Most of this oil goes to Asia, Japan, India, and China. And so if this closes, which currently it is closed, it could significantly impact the price of oil. Most experts believe that if it's closed for more than a couple weeks, oil could easily be over $100 a barrel. There are two ways that what's happening over in the Middle East can impact U.S. markets. One is earnings. So will this negatively impact U.S. corporate earnings? And two, does it impact the valuation multiple? At this point, we don't think it's going to impact earnings. We're looking at unleaded retail gasoline prices. Right now, they're $3.10. If they were to go to $3.75, we would get a little bit more concerned. That's a level historically that has impacted demand. And I have a chart of this on the screen. We're still a long way from there. Second, does it impact the multiple? I have a chart of the price of oil as well as inflation expectations. When oil goes up, inflation expectations go up. Typically, interest rates will then go up, and that can cause the multiple of the market to go down. So that's something we're watching very closely. Ultimately, we think the short-term direction of the market will be dictated by the scope and duration of the military operations in Iran. I would say that you do have the US midterms coming up, and you also have China is very dependent upon the oil coming from the strait. So that would suggest that maybe this is going to be a little bit shorter than what some people are suggesting. So how are we positioning portfolios? I think there's three things that we're doing now and that we always do. Number one, we stay diversified and we have exposure to a variety of different asset classes. Number two, in times like this, we high grade the portfolio. So we go up in quality and, both diversification and high grade. And we've done this over last year and earlier this year, where we've reduced international exposure and have gone up in quality into the US market, specifically US large cap, which is holding up better over the past few days. And lastly, we look to lean in. If there's dislocations in the market, we will use this as an opportunity to lean in to opportunities we think are attractive. That's what we're doing in the portfolio. If you have any specific questions about your plan or about the markets, please contact us. We will be doing more of these videos real time when events happen in the market. Talk soon.